So here's the balance sheet for Rock Castle Construction. Now, notice that it says as of December 15th, 2025. That should be a reminder to you that the balance sheet is only as of a specific day. The next thing is we're going to start walking through the chart of accounts in order that the chart of accounts was created. Now, if you have something in your assets that are categorized wrong, it may shift the way they show up. For example, your assets are listed in order as how quickly can you get a hold of those assets. So your cash, your checking accounts, your savings accounts, your petty cash draw, those are all immediately. You can just go to the bank or go to your petty cash draw and take out that asset, take out some money. So those are always listed first. After that, you have the accounts receivables, your customers who owe you money. Those will be coming in within the next week or maybe month. So that would be the next, as to how quickly you would get these assets. Under that, we'd have other current assets such as your inventory. If you were to go out of business and you had to sell all of your inventory, it would take a little bit of time. So that would be, later on down in the chart of accounts. If you have employees that you have loaned money and now they pay you back, that would also be a little bit further down the line because they probably won't pay you back immediately. Okay, so we have those types of things and the prepaid insurances and stuff like that. Those would all be other current assets, but they're still an asset to the business. You won't get your hands on that asset immediately. And then lastly, we have stuff like the fixed assets. These are items that are really going to be hard to get your money on really quickly. And that's stuff like if you own vehicles or land or the building, those are all still assets for your company. However, it takes a long time to sell your land or to sell a business or your building, I'm sorry. So those are fixed assets and they're listed lower down on the list of assets. So as you look at your list of assets, take a look at it and see if your chart of accounts is in the correct order. Make sure that the things that take the longest are lower down on the assets and they are the fixed assets. Okay, so we are going to, so here's your balance sheet. Obviously, the first part is what I just talked through, all the different types of assets. Okay, so then we come up with a total assets. And next in the balance sheet, we're going to talk about the liabilities and the equity. Now, the reason it's called a balance sheet is because the total amount of your assets needs to balance with the total amount of your liabilities and the equity. So assets equals liabilities plus equity. So let's get into explaining liabilities. Now, liabilities are what you as a business owes other people, whether that is, through vendors that you owe, which would be the accounts payable sections, whether that is through credit cards or small business loans. Whether you have a payroll department and your payroll you have to pay on a monthly, quarterly basis, you have to pay the portion that you withheld from your employees' taxes for taxes. So those are all liabilities. Sales tax is another liability. All right. Again, they're listed in order here as the way they would be on your chart of accounts. Then we have loans, and if you have vehicle loans or mortgages and stuff like that, those are all listed as liability. It's what the business owes. So if you were ever, God forbid, had to close your business and you sold off all of your assets, first of all, you would need to pay off all of your liabilities. And what is left should equal what is in the equity. Okay, so that's very easy how to look at that. Now, the equity is basically the the value left of your business. Okay, so like I said, if you took all of your assets and paid off all your liabilities, what's your business worth? What's the last financial, how much is your business actually going to be worth at that point? So this is, again, a history of the business. Every year when you close out the business, whether you had a net profit or a net loss, if you had a net profit, then that amount will increase into the equity. All right. If you had a net loss, it will decrease the equity. So it is, again, the history of the business. So the total at the bottom, which is liabilities and equity together, that should equal the total of your assets. Okay. And in this example, 674, 181.01, and down here, 674, 181.01. So it's perfect. It is in balance. Your assets do equal the liability and the equity. Now, if you were in business and say you wanted to go get a loan, they would want to see your balance sheet. They would also want to see probably your recent profit and loss to see if you're making income, making a profit each year. One of the other little tidbits here that I didn't mention, and that is whether your business is accrual basis or cash basis. It's important to know the difference between the two. You need to keep your financial records based on how your taxes have been filed, whether it's been accrual or cash. You need to look at your previous tax records. But a little simple explanation: accrual basis will show you the monies that you're expecting to get in. Okay, it will, it includes the money that you have billed for, but you haven't been paid for yet. All right. So when you look at the income, it shows probably more income than you've actually received because you still have these outstanding invoices. However, a cash basis runs on strictly cash, what you actually got in, what you actually deposited in the bank. And so these open invoices do not show the same way in the cash. So sometimes it is easy to jump back and forth between the two when you are running reports for, like, say you're applying for a loan. It's easier to jump into like an accrual basis to show the full picture of the money that you're expecting to come in compared to what has actually just come in. So that's just a little tidbit there to show you and explain to you the difference between the two, accrual or cash. When you set up your business, though, remember you have to set it up the way that your taxes have been filed. Whether it's been accrual or cash, you have to keep it that way. But you can flip-flop between the two if you need to print out a report in the other type. All right. So there's my quick rundown as to a balance sheet and how to make sure that your financial health of the business is good. Um, Again, this shows you the total liabilities is probably a very key thing. If you're going to apply for a loan, you need to make sure you're not like, your debt to income ratio isn't too high. And that would be easy to see here on the balance sheet. We have just gone over the balance sheet. If you liked this video and it helped you, go ahead and click like or click the subscribe button. If you're interested in going through a more in-depth course on QuickBooks software or on the accounting fundamentals, those links are listed underneath this video as well. So go ahead and click the link or subscribe now, and I will see you in the next lesson.